Hello, Matthew Hines here with Dominion Lending Center's Edge Financial. Today I want to just discuss with you the new rules, new mortgage rules announced by the Office of Superintendent of Financial Institutions on October 2017 of this year. They announced three new rules that they want implemented by January 1 of 2018. Rule number one is a new stress test rate on uninsured mortgages, no more bundled mortgages, and number three, loan-to-value limits to ensure risk responsiveness. The three new rules apply to federally regulated financial institutions only. I won't focus too much on rules number 2 or 3, as I don't believe the impact to the market is very material, whereas rule number 1 will have the largest impact on those that it affects. So quickly on rules number 2 and 3, bundle mortgages. If you are not sure what these are, quickly, this is the practice of more than one lender pooling money together to create one mortgage. In other words, if you are required by your financial institution to put down 20% to qualify for your mortgage, but you only have 15%, you're short 5%. In the past, some lenders would have allowed you, or would have gone out for you on your behalf and got a second lender in place to provide that 5%. They bundle it up as one mortgage, and off you go. OFSI doesn't like this practice. They see it as circumventing the mortgage insurance rules, so they have axed that. Loan-to-value risk responsiveness. This one is not really a big deal, as most lenders have been practicing this for the last 10 to 12 months anyway, but this is limiting or requiring them to limit the amount of money they're willing to loan against the value of a house, depending on the volatility of the real estate market that property is situated in. So for rule number 1, the big deal, the stress test, this requires all uninsured mortgages to be qualified at the contract rate plus 2%, or the Bank of Canada benchmark rate, which is currently at 4.99% today. Previously, uninsured mortgages could qualify at the contract rate. This change will have a material upwards of 20% impact on housing affordability for those who do not qualify for mortgage insurance. So to put that in perspective for you, let's assume a $400,000 property and a contract rate of 3.44% uninsured would require a household income of $70,000 to qualify, or thereabouts. It's an approximation. Under the new rules, the 3.44 plus 2%, which is going to take the qualifying rate to 5.44%, would now require a household income of $85,000 to qualify. So you can see that there is a material impact there. The question is now for you is what constitutes an uninsured mortgage. So I'll just go over a quick list of what would be considered an uninsured mortgage in terms of the new mortgage rules. Refinances. If you're refinancing your home, whether it be for debt consolidation, take equity out to pay for education, or invest for retirement, these will now be uninsurable. Purchasing a single property unit as an investment property. In other words, purchasing a single family home or a condo as an investment property is uninsurable and will require you to qualify the new stress test rate. Purchasing a property greater than $1 million is uninsurable and will be required to qualify the new stress test rate. Extended amortizations greater than 25 years are uninsurable. If you have past credit issues that prevent you from being insured, obviously you'll be uninsurable and have to qualify based on the new rules. If you're a self-employed person who needs alternative or non-traditional forms of proving income, you will be subject to the new stress test rules as well. A couple of misconceptions out there I just want to go over with. Actually, before I get to that, let's go back to the single unit investment properties for a moment. This is important to go over. If you have a condo, pre-construction condo, closing after April 1st of 2018, and this has been purchased as an investment property, you will be subject to the new rules. So I suggest you contact your mortgage broker or your financial institution as soon as possible to figure out how the new rules are going to impact your ability to close on that condo. A few misconceptions out there. Just because you have greater than a 20% down payment does not in itself make you uninsurable. Okay? For simplicity's sake, we say if it's greater than 20% it's uninsured, if it's less than 20% it's insured. It's a simple way just to segment it out, but the reality is that most lenders will back-end insure your mortgage anyway. This just means that you don't see the mortgage insurance. In other words, you don't pay the premium on it, but it is insured in the background. So just because you have more than 20% down in itself does not make it uninsurable. If you are in the category of being uninsurable and are actively in the market to purchase, refi, renew, you do not have until January 1 of 2018 when the rules are set to be implemented. The wording in the documentation is that federally regulated financial institutions are to implement the new rules no later than January 1 of 2018. Currently, feedback from many of our lending partners are that they will be implementing the new rules by mid-December. We've heard dates of December 10th, December 15th at this point. So if you're actively in the market, whether it be to consolidate debts, purchase a new home, if you have a renewal coming up, and you don't want to, and you want to be out there shopping and maybe switching lenders, then you definitely want to get ahead of the game here and get the ball rolling. And just because you're switching lenders doesn't mean you will be uninsured. If your mortgage was previously insured, then that insurance can travel with you. But just to be safe, consult a mortgage broker or your financial institutions to make sure that the new rules aren't going to have a material effect on your ability to do that. The new rules. The rules apply to federally regulated financial institutions only. Mortgage brokers, we have relationships with many lenders, and many of those are not federally regulated. Now, whether or not those institutions will follow the new rules remains to be seen, but at this point, they're not saying that they will be. So there will be some, currently there are alternatives out there for you, so definitely consult a mortgage broker. Now, to help you with understanding the new rules, we have a 2-page infographic here that you can download. Just above the video here, you'll see a link to a PDF file. Click on that link, download it. It has all the mortgage rules and how they're going to affect you on here. If you watched the video this far, clearly you are interested in the topic and educate yourself. Get a copy of the mortgage rule changes infographic here. Just click on that link and it will come right to you. No email address necessary. Okay, if you have any questions, email, phone, message. I'm here to answer your questions at any time. Until next time, have a good day.